I hope this is the best Roth conversion video you'll ever watch, and I also hope it's the only one you really need so that you can make a good decision for your own retirement. Now, who the heck does this not apply to? If you don't have pre-tax money in a 401k or IRA, my job is to certainly advise you guys and give you insights on what to do. But also part of my role is to make sure you're not wasting time on things that don't apply to you. I want to save you time. So this is not the right video for you if you're not worried about a big pre-tax balance. What if all your money is in a Roth account? What if all your money is in an after-tax or brokerage account? You don't need to watch this video. Now, if you do, most of you have a 401k or an old 401k that's now in an IRA. Maybe you've inherited money. This absolutely applies to you. And check out why I think this is going to be my best video yet. Look at my screen right now. So I'm going to show you the power of Roth conversions as well as the power of when not to do it. And you're going to see a real example so you can determine for your own retirement what to do. Now, if you want to use the exact tool I'm about to show you, it is in the description of this video. Watch this. So here's a couple, okay? They're 51 and 52 with a 20-year-old child. They have $2 million in pre-tax assets in their 401k. They want to retire early. They want to do Roth conversions because a lot of their money is pre-tax, which means you put your money in, you got a deduction, it grows, you pay no taxes. When you take the money out, you got to pay taxes. Roth conversions allow you to think differently and go, wait a second, let's pretend I retire at 55 and now I have no income. I mean, I need income to live, so I'm going to send myself money from my portfolio, but technically I have $0 of income. And you have a brokerage account. Well, a brokerage account, when you sell from that, assuming you've held for over a year, you get to pay what are called capital gains taxes, which is a lower bracket, a lower set of tax rates than ordinary income. So the beauty of this is you can retire at 55 and theoretically have very little income on paper. You can show very little income and create a lot of income. It's really cool because you could just paid a lot of taxes your whole life. Now your income is theoretically zero, except for dividends and interest and other things like that. And now you could literally convert a ton of money at potentially the 12% or 22% bracket. Say, I'm happy to pay taxes now at 12 or 22. So in the future, I don't have to pay taxes at 30 or 40. You're taking that tax delta and look what it does. So look at my screen real quick. I'm going to assume that their child were to ever inherit the money, they're the 30% tax bracket, just being conservative here. This, you can see, is a tax strategy, a Roth conversion chart, how I like to explain it to clients. Every line here is a tax bracket. So the turquoise line is 10%. In a previous video, I called this the cayenne line, like from the printer, but I don't know if it's cayenne or cyan or whatever. Green here, you can see, is the 12% bracket. The orange is 22, the tan is 22, orange 24, and purple is 35. So watch this, ready? We're gonna zoom out here. Let's go fill up the 12% bracket. What would that do? Would that add value? Oh yeah, look at this, $1 million more tax-free dollars. Once again, why does it do that? I'm going and happily paying taxes at a lower tax bracket compared to where I'll be in the future. So you can see all this green getting filled up in here. That's me doing Roth conversions. What if we go further and fill up the 22% bracket? You think that's going to increase it? Oh my gosh, look at this. $6 million more dollars. Before you start going, I want to do Roth conversions, don't leave yet. I will show you why. I mean, how cool is that, right? Who wouldn't want $6 million more tax-free dollars? I mean, I know I would, but watch this. What if I go out further? 24% bracket. Wait a second, that just decreased 2.8. It said 6 before. I want the 6. What happens if you go out even further? 32%. Oh my gosh, guys, it would be better to do nothing at all. You'd have 2.3 million fewer dollars. So here's why I'm starting with this in today's video. Don't make the mistake of being conversion happy, where you just heard about a Roth conversion, your neighbor says you got to do it, your friend, your coworker, and now you're all into Roth conversions and you want to do it because it's cool, it's different, you're hip, okay? Don't be hip and do Roth conversions and lose millions of dollars. I'm going to tell you the number one thing right now to actually consider before you do any of this, okay? The number one thing before you do anything we talk about is first ask yourself 2 questions. Would you rather retire earlier and would you rather spend more money? Because the easiest fix to a Roth conversion problem is not doing more Roth conversions. It's not even a Roth conversion problem. It's what's called an RMD problem, required minimum distributions. Why do I even talk about Roth conversions? Whether you want to or not, you will be forced to take RMDs in the future. Let me show you what this is and how you can actually plan for it. So in this software, once again, you can get access to this. If you click cash flows here and click summary here, you're going to look at someone's real income. So here's someone we work with. They bring in $194,000 a year. That grows. At 56, they're going to have no income. Now, they're going to be sent income from their portfolio, but they have no W-2 income. Then they're going to have Social Security. Then they're going to have RMDs. You see how these are going to start here at 75? In 2049, they will have $113,000 of Social Security adjusted for inflation and $230,000 of a required distribution, which means $344,000 is coming in the door, $344,000. And they're like, hey, Ari, have you never listened to me like once in any meeting? I don't need $344,000. And I'm like, no, I get it. And I know you only want to spend $174,000. You've got taxes of $60,000, which means you need $233,000 and you've got $344,000. And they're like, yeah, so aren't I paying you money to fix this? And I go, yes, because if we didn't, all of this spend unsaved, all of this column here, this all gets taxed at your highest marginal bracket. So if you're like me in California, you're getting taxed what we call up the wazoo, okay? I try to keep it a little fun, silly here sometimes. So the point here, what do? What if you determine you'd like to spend more money, okay? You're like, I want to retire early. I want to spend more money. Here's someone that wants to spend $7,000 a month and originally $15,000 a year on vacations. We upped that to $30,000 because we were talking about it in our last meeting. But let's pretend we ramp this up. And they're like, we want to spend $12,000 a month. We're big ballers, okay? So I just increased their spending like crazy, okay? Well, if they wanted 12 a month, they'd run out of money at 72 and they would have no RMD problem. They'd have a bigger problem, which is they'd run out of money. So what we want to do now is go, what if we put it at 10,000 a month? Just to show you an example. Now we're putting it 10,000 a month. Are they okay? Well, you can see they're okay. There's $600,000 at the end, okay? So they just spent another, let's call it $36,000 a year. I did not recommend a Roth conversion. I didn't go into tax planning at all. All I did was say, guys, would you like to spend more money? And they're like, yeah, I mean, who wouldn't want to spend more money? Well, the crazy thing is we have clients that go, look, I couldn't spend more money if I wanted to. And now I'm spending, I feel like frivolously, and I don't want to do that. That's okay. That's when you should do Roth conversions. But look at this. This is the same chart I showed you guys just a second ago. Do you remember what it said when I did the 12% last time? It was like $1 million of value. Now it's saying no value. Do you guys remember when I put it to 22? Remember it was like $6 million of value. Remember that? Now it says 400,000 fewer dollars. Why is that? The reason it's the case is they're now spending more money. They don't have an RMD problem. So I just fixed their Roth conversion strategy, and all I did was tell them to spend more money. I could have also shown them retiring earlier. So don't make the mistake of spending frivolously and truly just spending because you feel like you have the assets to do so. Like, don't do that. Also, don't just, work a job that you hate where you're miserable and in a high stress position all because you feel like you're going to do Roth conversions later. Like, that's defeating the purpose of all of this. You want to live a great life. A sign of a good financial plan is a life well lived, not how good is your Roth conversion strategy. Now, why am I making this video? Well, what prompts me to make these videos are your guys' comments. So you can see here on my screen now, this was 8 days ago as of this recording. Someone said, a Roth conversion can be a smart move to minimize taxes, especially if you expect your tax rate to be higher in the future. However, it's crucial to understand that converting pre-tax to Roth means you pay taxes on that converted amount now. It's important to do this strategically to avoid a hefty tax bill all at once. They're absolutely correct. Now, this is what we help our clients with. We're doing the tax planning. We're doing the estate planning. We're doing the withdrawal and the insurance. If this is the type of guidance you want in retirement, so you don't have a new job having to do this, that is why we exist. If you go to rootfinancial.com, in the upper right, you're going to see a little button that says, see if you're a fit. If you click on that, you can actually see, and I'll do it with you guys right now. You can see what it'll look like. You'll click this right here, see if you're a fit. What I encourage you to do, if you're really interested in the tax planning side, when I talk about tax planning, like what does that really mean? If you go to our resources under FAQs, you are going to actually get to see how do we handle tax planning? Well, one, we explain it. We focus on tax planning, not filing the return. We help with Roth conversions and harvesting and charitable strategies and optimizing income for healthcare purposes. You can see more about what this actually entails on our website here. Get a good sense before you reach out so that you're clear that we offer what you're actually looking for. We definitely don't want to waste your time, and we kindly, ask that you don't waste ours. Never want it to feel pushy in any way, but we want to certainly ensure that you're going, wow, Root is the type of company that is giving me the service I'm looking for. And we're very honest with who we do not make sense to partner with. We do not work well with people that are coming in going, I want you to beat the market every single year. That's what I'm paying you for. Well, imagine you beat the market, but you ran out of money. Would that be worth it? Probably not. Most people don't necessarily want to beat the market. They think they might need to beat the market to be on track for their goals, but they don't. There's other trade-offs. They can spend less. They can work more. They can look into other, career opportunities. I'm not saying you have to go that route. What I'm saying is I want you very clear when you work with Root on what we can do and what we can't do. We're not superhumans, but that wasn't even a word there. I was thinking of superheroes and I said superhumans, but you get my point here. I'm a human. You can see these videos are not perfect. I just love this stuff, and so I put it out because I want to show you guys Roth conversions, when it makes sense, when it doesn't. This is one planning tool. There's so many when it comes to retirement. If you think that we could help, it would be our pleasure to serve you. Hear from you guys soon.